We have with us Mr. MK Surana, CMD of HPCL. Thank you for joining us, sir. Sir, GRMs have fallen from $4.81 per barrel to 7.61 barrels a year ago. What is the reason for the fall in GRM for this quarter?
Basically, three reasons. One thing is the crude price has gone off by almost $24 to $25 per barrel. In the refinery, we burn fuel for running our furnaces, refineries, etc., boilers, etc. So there is a higher fuel and loss component value-wise. That's one reason. Second thing is that the cracks on most of the products are lower except the middle distillates, that is HSD and Kero. So the lower cracks, higher fuel and loss component, and exchange rate variation. These are the three main reasons.
Okay. So how do you see GRMs going forward in the rest of the financial year?
As far as the diesel cracks are concerned, that had been stable and that has been strong, and we expect it to continue to be strong. MS cracks had been lower, and that also is expected to be lower. So there is a combination of something good, something bad. Crude prices had cooled off recently, and we do expect it to be on the lower side, between 70 to 75 for at least some time. And that should help in certain strength in the GRMs. At the same time, there should not be too much of volatility which honestly result into inventory gain losses. So let's see how it progresses. The Iran issue will have an impact in terms of the pricing part of it. So higher crude prices have an impact on the GRMs.
Okay. Sanctions are going to play out by November 4. How are you seeing it? How will you source crude from Iran? Will you continue sourcing crude, or how will that play out?
No, in HPCL basket of the crude oil, Iran quantity is a limited quantity, so we are not that much impacted by this. But as the situation developed, we will decide on that. The alternative crudes are available, and we had been procuring.
So how are you going to replace it? From which other countries you will buy?
No, we had been buying the crude from many countries: Saudi Arabia, Kuwait, Abu Dhabi, UAE, Iraq, Nigeria. We had been buying the crude, so we'll continue to do that. Middle East countries, African countries.
Okay. So the government had directed to absorb ₹1 on retail of petrol and diesel. What impact has it caused on the company?
No, it does have impact in the bottom line of the companies, but we are trying to make up with the other efficiencies which we can bring in on our operation. Like I mentioned earlier, we had recently bought 3 racks of LPG. We are the first company to own our own racks for transportation of LPG. It is going to bring some logistic advantage. We are defining the alignment of the secondary to primary to secondary distribution system, so that we can bring in logistic efficiency. In the refineries, we are working on the projects to bring in the fuel efficiency. So we'll try to do that. We bring in the cost advantage to us. And as far as the market pricing is concerned, as of today, we are passing on ₹1 per liter price to the consumers.
And by what time will you pass on this cost to the consumer?
It depends on how the prices move. So there was a purpose for it. Okay. And the cooling of the crude oil gives an advantage in streamlining the system properly.
Is there any plan for buyback or dividend for the company?
No, HPCL has got no plan for buyback as of today. And dividends, we decide from the time, so we will decide that way.
Okay, on HPCL MRPL merger, how far has it progressed?
There is alignment in the thought process as far as ONGC, MRPL, HPCL is concerned, and we are working on that. And I am hopeful that something positive can come out.
Do we see it happening in the next financial year?
I think so.